All right, we've been wanting to do this one for a while. Top 5 mistakes first home buyers make when they are on their property journey. Let's dive straight into it. So, mistake number 1, and I know Pete, you want to dive straight into this one. Thinking the real estate agent is on your side. Is that not the case?
No, far from it, really. They are trained to come across as your friend. People don't realize the amount of effort that real estate agents go into their training side of stuff. And Sky could talk more to it as well, but a lot of it's around buyer management and trying to really somewhat become their friend or befriend them just to get as much information as they can possible, because at open homes it's game day for a real estate agent and their main objective is to find out as much as possible about potential buyers.
Absolutely. Real estate agents are just trained to be likable. Most of them aren't, but
I was about to say, real estate agent and likable, do they go in the same sentence?
no, but the skills that they learn are to ask questions. Like, that is number one rule: ask questions, because everyone loves talking about themselves. And in getting that information, they then use it against you at negotiation time. So you're spot on. But I think some agents can be likable, like myself. But at the end of the day, we work for the seller, not the buyer. Mm-hmm. So, you can't call your real estate agent your mate, because unless they're selling your house, they're not working for you.
I'm interested to dive into that a little bit more from the two of you. Why do they want to be likable? How do they create that impression that they're trying to help the person who's actually buying the property? Because I hear it from first home buyers all the time. They're like, the real estate agent was really helpful. One of my favorite lines is, they really want to help us buy this property.
I actually find this hard to answer, though, because I do actually want to help people. But at the end of the day, I don't work for the buyer. People who are saying that, oh, look, the agent's trying to help me buy the property. No, the agent's trying to sell the property. That's all that they're paid to do.
Mm-hmm.
Yeah, and if they've built up enough rapport with you, they can easily, without you knowing, you're going to give away your budget or what you're looking for, and they'll use that against you in their negotiations as well. Because if you put an offer forward and they do need more money to get the deal over the line, let's say you put in an offer at 600,000, but they know their vendor wants 630. If they've already built that rapport with you and I guess befriended you as the buyer, they can quite easily come back to you. It makes that negotiation side for them a lot easier to try and come back for more money, because they can flip it on its head and make the buyer feel like they're helping them get the deal. They're helping them. They want them to get the property. So if you can come up a little bit more, 10, 15 grand, I can get the deal done for you. So the friendlier they are, the easier they find it to also negotiate and get the price they want in the end as well.
Yeah, because as the sales agent in that scenario, I know how hard I can push it. If they're at max capacity, there's no point having that conversation. But if I know, because they've told me, that there is wiggle room in that budget, or they've got a parent who's going to help them, 100% I'm going to tap into that.
I feel like it's one of those old school cartoons where we're like, when the agent hears that there's a parent involved, there's just like huge dollar signs in their eyes, and they're like, oh, wait, you mean your parents can help you? Yeah, for sure. Let me have a chat with mum and dad as well, and let's all talk about how much you love this property together.
Mm-hmm. And there's been many banks of mum and dads who have helped people buy a property lately.
100%. And I think one of the biggest ones that I see is agents trying to help buyers, particularly first home buyers. And it reminds me of a story of, I had clients who were at an open home and they'd been looking for a really long time, going every single Saturday, waking up 9 a.m, out the door, doing the 10 a.m. open, doing the midday open, doing the 2 p.m. open, and having 30 other people there, and they were just fucking over it, right? Going through that process is really difficult, really stressful. I think they were just really worn down. And because of that, they had an agent who I'm sure still wanted to make them feel better, but could see that they were probably an easy target. Put their arm around them and be like, hey, I know that you're really keen on this property. There is something that you could do that I think that would get it across the line for you. Wet behind the ear first home buyers, like, ooh, tell us, what can we do? We're over it. We really love this place. What can we do to get it done? And the helpful agent is just like, oh, you could just put in an offer unconditional without a finance clause. If you do that, then it looks really good in the vendor's eyes, and I can really advocate for you to get that across the line. If it's your offer versus someone else's and your one doesn't have a finance clause, then you're more likely to get it. Is that something that you're willing to do? And thankfully, client picked up the phone and gave me a call and was like, hey, the agents just said this, and they've said that it's really normal. They've said that people put in offers without finance clauses all the time. Is that something that we should do? And I almost choked on my breakfast. And it was crazy to me because from my perspective, being the broker, being the money guy, it's protect yourself as much as possible. Make sure those finance clauses are in place. And I'll chat with the agent. I'll let the agent know that your finance is bulletproof. We can get it across the line quickly. But if you go in without a finance clause, your ability to pull out of that contract just disappears. You're stuck. You've got to purchase it regardless. It creates a massive headache. And it all came down to the agent caring for the client, putting their arm around them and trying to help them. It's those agents that I feel like first home buyers need to be really wary of because they're really vulnerable during the journey. And really, it should be your buyer's agent putting that arm around you. It should be your mortgage broker putting that arm around you. If it's the real estate agent putting their arm around you, then potentially you're going to be overpaying by a shit ton.
I think the word advocate, when the agent says, put your offer through with whatever terms, like you said, unconditional, and they say, I'll advocate for your offer, I think that's a bit of a red flag.
Why are they advocating for your offer over other offers, for example?
Yeah.
Are they saying that to every buyer?
They're advocating for everyone. And then whoever pays the most amount gets advocated for the most.
Yeah,
Exactly.
the highest amount.
Probably a good quick segue, Pete, into, I guess on your side of the fence, being a buyer's agent, what kind of actions are in place on your end to do that advocacy work, to actually be that friend?
So the number one thing we do with our home buyer clients is we put a wall between the agent and them. So when we go through the open home with them, we keep them very close. We don't really let the agent have an opportunity to talk with them one-on-one, because I do feel like at the moment, agents, they're somewhat training themselves around how to cope and handle buyer's agents. And one of those mechanisms, and I don't know if it's happening, but wouldn't be surprised, is how to try and tap into the buyer, get around the buyer's agent, not in a bad way, but talk to the buyer directly to get some information from them, because when they go to their vendor, a good buyer's agent hasn't given away much. They're not really sure where they're going to stand in terms of the offer. So an agent is going to want to try and get to the buyer as much as they can. We act as that kind of barrier, and communication goes through ourselves. So from our client, the buyer, to ourselves, we advocate on their behalf and deal with the agent.
Yeah, for sure. So it sounds like you do a lot of filtering of the emotions in that situation. It's a very highly charged situation, and you kind of act as a bit of a shield for the client and protect them from all the bullshit that might end up hitting them.
Yeah, that's it. Protect their budget is the big one, really. Don't let them give away any bit of information that will indicate where we sit on the property.
I love that. Protect their budget. A really good segue in terms of shielding them to mistake number 2 on our top 5 mistakes first home buyers make is buying based on emotion and not strategy. Sky, jump into it for us.
I love buyers who are emotional about a home. It means money. That's all it means. Don't get me wrong. I became a real estate agent because I loved everything to do with property, quickly found out it's nothing to do with property, it's all to do with people. But I've been part of some amazing moments in people's lives because I'm part of that journey. So there is some niceness to it when people are emotional about a home. But if I'm selling a property, I am absolutely working on the emotional buyers. And the emotional buyers are so obvious to see. That's where the buyer's agent comes into it, because you can just tell when someone is emotionally invested in a property.
What sort of behaviors, what examples could you give us that would be an immediate giveaway that you've got an emotional buyer in front of you?
Definitely repeated follow-up. If they're calling me, particularly in this market, then they're invested. I think if you were trying to play it cool, you'd be letting the agent call you. You can be very matter of fact around it and go, look, I'd like to put in an offer. But if you then don't hear back from the agent, yeah, I'd be leaving it with the agent to follow up. It's playing the game on the other side. As much as the agent's playing the game with you, you need to play it back.
That's interesting. So you're saying don't chase too hard, which would be the opposite instinct for
Hard
most
to
first home
do.
buyers, right?
But like, I really want this home. Very hard to sit back.
I'll jump in. I've got one.
Yeah.
I'll jump in. I wasn't sure if you were going to, yeah.
I was done.
Yeah.
Yeah, the other one is, and it's something we coach our clients on, is not being so emotional when they walk in and actually start to somewhat plan or talk to their partner about what they could do with the space. Because when they're constantly talking about, oh, that could be the bedroom there, or we could do a study here and that, the agent is listening and they can tell that when you're getting super excited about it, you're becoming quite invested. We tend to make sure our clients are somewhat trained on when we walk through, you keep a straight face. Try not to show too much emotion because the agent will pick up on that. And us as buyers agents can only do so much, right? We'll go in with our straight faces, but if the client doesn't do that, they do give away not necessarily the budget, but that they're actually quite emotionally invested in the property. So trying to keep that game face on.
It sounds a bit wanky, but it's an energy. There is a lot of energy in sales. And so when you go to a property and there's a lot of people, that lifts the energy somewhat. If the inspection's really busy, the energy around that and how buyers approach it, there's that FOMO sense of energy, and the agent also has a different energy because they've either already got offers or they're getting offers. That is the best scenario as a real estate agent. Once you have an offer, you're like, yep, we're on, we're in business, this is happening. And so that energy that both the agent and the buyers within the inspection drives more of that and gets people more invested as well. If I was a first home buyer, I wouldn't stress out about that energy at the open inspection, for example. Just, be chill. If this is the right home for you, it will happen. As opposed to feeding into that. I've seen it so often, and you'd see it too, Pete. Like when you go to those really popular homes, there's an energy there.
Definitely. And first home buyers in particular tend to miss the issues because they let their emotions take over. And it's happened with us. We'll go through the property with them and afterwards they'll be like, we love it. And I'm like, well, don't you remember we looked at, there was a crack there and some issues in the bathroom there and there were certain things that were wrong with it. They completely forgot about it, even though we stepped them through it while we were at the home. They weren't listening. Their emotions had taken over and they were already planning in their head what they were going to do with the property. So
They've already moved in.
They'd already bought the property. Yeah.
Yeah, the visualizing yourself in the property and riding that emotional high, as soon as that happens, and I see it all the time, you put your budget, your safety net, your plans completely in the bin. But the other thing that I really see happen really frequently in the first home buyer space is we're talking about avoiding buying emotionally, even though it is an emotional journey. It's about controlling your emotions and not giving them away. You're going to feel emotional about things, but it's about making sure that the agent doesn't catch on to that and use it to their advantage and having a strategy in play to manage that. Pete, you've got a really great example of an exercise that you do with clients in terms of negotiables and non-negotiables, which I'd love for you to quickly go through because I think it's basically the opposite of buying purely with emotion, and it's a good combination of, yes, it's an emotional purchase, but we're going to have some strategy about that.
Yeah, so we sit down with clients right at the beginning and we get them to do a bit of an exercise separately, and they need to put on paper what their negotiables are and their non-negotiables. And the key for this kind of little task is for each client in the relationship to not actually disclose what they are with each other, but just send them directly to me. So do the exercise
Spicy.
individually. Yeah, just break it up a little bit because if they do tell their partner, then they will change what their negotiables and non-negotiables are. There will be a bit of back and forth. So the purpose is to actually put it all out on the call when we jump on that and go through that list. And often they don't actually realize what each other's negotiables and non-negotiables are. So we can iron that out, and then that forms the strategy basically for what we're looking for. And that helps keep emotions in check as well, because one partner may fall in love with the property, but there's some non-negotiables there with their other partner, and then that brings them back in line, and then we continue looking rather than get emotionally invested in the property.
That would make a massive difference when it comes to features and what they're looking for in the property and getting real clear on that. And we do something really similar when it comes to the purchase price side of things with clients, especially the first home buyers, where we'll look at how much money they have aside for a deposit, an emergency fund afterwards, how much they can borrow, and look at that as a package in terms of what their maximum budget is. And then from there, I'll actually ask them where they want to live and what type of property they want to be in. Usually on the call with them, we'll go through the suburb data, the pricing and sales history, just to make it really clear whether they actually are looking in the right areas or expecting the right things, and where to cap their expectations. And I think when you're clear on the features that are non-negotiable, so the needs instead of the wants, and you're very clear on the price, you can almost take as much of the emotions as you can possible out of the whole journey and come across as a really confident purchaser instead of a purchaser that an agent's going to look at and be like, oh, they're running high on adrenaline and I can get an extra 20, 30, 40K out of it because they're visualizing themselves in the house and I can see them doing that.
What's the quickest way to take the emotion out of it? Look at the costs, right?
Then you end up with a whole bunch of other emotions that you don't want to feel. Costs. Amazing segue into mistake 3 on our top 5 mistakes first home buyers make is ignoring the hidden costs of ownership. Now, Pete, I know that you'd see it on the front end, and Sky, you'd see it in terms of the ongoing maintenance of the properties. Start with Pete in terms of the front end purchase of properties. What are those costs that really get ignored when it comes to people buying a property?
I find a lot of people, particularly first home buyers, so in their defense, they've never bought before. They just assume it's just the deposit they need to come up with because the media and everyone around them probably talks about deposit, deposit, deposit. You need 10% deposit to put down on the property. But there's also the other costs that people are missing, like your stamp duties, which can be anywhere between 3 and 5%, depending on which state you're buying, of the purchase price. So if you're buying something for 500, stamp duty could be 20, 25 grand on top of your deposit. Plus you've got your conveyancing and all your government charges. Your broker might actually charge a fee as well. And yeah, it's just all those other costs basically on top of the deposit. If you've got a deposit of 10% on a 500 grand property, that's 50 grand. You probably need at least another 25, 30 on top to cover all those other costs that I talked about.
Yeah, for sure. I think another one that it's a startup cost that people don't really think of, but it can get really expensive. Moving. Actually, moving can be really expensive, especially if you're going an hour away, 2 hours away, removalist, packing all that stuff away. It can end up being a $10,000 exercise, which my advice would be just get all your mates to take a day off, shout them food throughout the day and get them all to do it. But some people aren't that lucky. And the other one is actually, as an upfront cost, is furnishing the house. When you're living at home, you might only have a bedroom that you're worried about. Or if you're renting in a smaller space, maybe you're in a 2-bedroom apartment together. If you're going into a 3-bedroom, 4-bedroom house, furnishing the house can actually be a really expensive exercise too.
Yeah. How many young single men that I can think of that just have one couch?
Yeah, a mattress and a TV. Yeah, yep.
As long as it's got a TV and a bed and maybe a couch if you're lucky. Yeah, no bed frame, just the mattress.
Yeah, and a fridge.
Yes, yeah. I don't know, that's what Uber Eats is for. Fridge, I wouldn't guarantee.
Yeah, that's true. So a lot of upfront costs that can be overlooked. And bringing it back to your example, Pete, let's say it's a $500,000 property and the deposit that they've accounted for maybe 10%, 50 grand, right? You could actually need double that as upfront when you think about deposit, stamp duty, fees, conveyancing, moving and furnishing the property. So a lot of people think that they're ready to purchase a property when they've got the 5 or the 10% deposit, but they're actually only halfway there, which is really disheartening. That's where when you look at the hidden costs, some of those hidden costs can be addressed by working with a mortgage broker, for instance, not a cheeky plug, and making sure that you get your first homeowner's grant if you're eligible. In South Australia for new properties, that's 15 grand. Making sure that you can get a stamp duty waiver if you're eligible for one. Making sure that you can put in a 5% deposit instead of a 10 or 12% deposit if you're eligible for one of the first homeowner grant schemes. All of those things can be the difference between getting into a property with $45,000 cash and needing 100K plus to get into that property. When it comes to ongoing costs, Sky, what do you see a lot of people forget about?
Just the fact that buying a property costs money. The one thing I do want to warn people on, and it's never happened for any property I've sold because I've made sure it's sorted, but it happened when I bought my own property, and I know countless stories. Settlement day arrives, everyone's excited, the truck's there, and the property's filthy. because there's no right of recourse. Money's been transferred. You want to move in, but suddenly you're scrubbing the toilet because no one bothered to do it, and the sales agent doesn't care, and there's nothing you can do about it. It's a shitty experience, but that's something to be prepared for, that come settlement day, that house isn't going to be sparkling clean. But the other one that I can think of, one particular buyer recently, they scraped everything together to get their deposit and fees and everything like that. Settlement happens and there's a major gas leak, and suddenly they're $7,000 out of pocket because you can't just ignore a gas leak. Stuff happens, and that's where having a bit of a maintenance buffer would be necessary. Don't put all your money into those early costs with fees and deposits. Have some money left over for that.
Yeah, for sure. I think that's why we, especially with first home buyers, I tend to lean towards getting them to borrow a little bit extra so they can just have more cash on hand in case stuff like that happens. What would you say would be some of the most expensive common maintenance issues that come up, especially with older properties, Sky?
Hot water units. They're one thing that I think most people don't look at. You generally only get 10 years out of a hot water unit. It's one thing you can't live without.
Mm-hmm. How much would a hot water unit be?
$3,000.
Okay, yeah. What else are we looking at in terms of big maintenance bills that are common?
Aircon, for sure. I mean, you could live without it, but it depends. If you're moving in summer and we've got a week of 45-degree days, do you really want to live without aircon? Yeah, aircon, anything plumbing.
Plumbing, yeah.
Yeah, like all you need is a flexi hose to give, and you've got a flood, and there's 5-10 grand you hadn't budgeted for.
Yeah, that is.
When you buy a property, it just does.
That's the thing. Like, I call it the Bunnings fund, right? When first home buyers go to buy a property, it's okay, what's left for a Bunnings fund? Something will break, you'll want to do something. Could be minor, could be major, but how much is left over?
Yeah, before you even think about what colour you want to paint the walls.
Yeah.
It's just to keep the place running.
No, 100%. When it comes down to identifying stuff like that that might go wrong, Pete, a pest and building inspection can be a really handy tool in these situations. In your experience, what are some comments or some red flags that pop up on pest and building that might indicate that there's a big repair bill potentially on the horizon?
The big one I find is the bathrooms. A good building inspector will go and do moisture readings, and they'll actually knock on the walls as well around the bathroom, but they know what they're looking for. But
they're allowed to knock.
Yeah,
Buyers aren't allowed to knock. Building and pest guys can.
Yeah. Only they can knock, because they know the difference when there could be possible moisture or even termites behind the walls as well, because termites get attracted to moisture, right? So there is that risk, but yeah, bathrooms are a big one. Broken breacher pipes, possibly, or leaking pipes behind the wall. That can cost quite a bit of money, and they can detect all that. So if there's high moisture readings in the bathroom, that could lead to issues around piping, but also failed waterproofing too. So a big one is if it's been renovated recently and they can't present a waterproofing certificate, if it's been within the last 12 months, we don't buy the property, because if it hasn't been properly waterproofed, it can cause a lot of structural issues in the future. You're going to have to re-gut the whole bathroom, basically. So that would be the big one, bathrooms.
Yeah, wow. Is there any other areas in the house that you would also say, besides bathrooms, that potentially are expensive red flags?
Yeah, the roof.
Under the kitchen sink, guys.
Yeah.
Okay, talk to us about under the kitchen sink.
Well, because that's where kitchen's all brand new and it all looks pretty. You open the cupboard and there's like mold underneath because there's been a slow leak persisting for months, and most people don't check. It's just the one under the sink. Don't be going through everyone's cupboards, but check the one under the sink. Wet area.
We had a recent, and it was actually one of my properties. There was a link behind the sink. The tenant didn't realise that was happening. Anyway, we had to rip out that whole wall. There was asbestos there too. Had to get all that cut. It cost a lot of money on my end to pay for that. But if someone was buying that house and they had looked under there, they would have saved themselves a lot of money just by looking behind the kitchen sink. So I think that's a really good one. The roof as well, though. Obviously, you can't get into the roof. That's what you pay the inspector for. But if there's any structural issues with the roof, that can cost a lot of money too. As much as some people think they are building inspectors or they're just as good as an inspector, you can't just look at a roof and know. You need to get inside. So that's what the inspector will do for you.
Yeah, definitely. Also, it's about not underestimating little things on a pest and building inspection as well. Good example that I had for one of my own places was a cracked tile in the roof. You look at it and you go, oh, it's just a cracked tile, whatever. How bad could it be? Turns out the way that the roof was pitched, that cracked tile was in an area of the roof where when it rained, all the water went straight through that cracked tile
course.
into the top of the roof. What happened next? The roof started sagging, and you've got a whole section of your roof that needs to be completely replaced, new plasterboards, repainted, all because there was a cracked tile in the roof.
Yeah. And most people do get their reports, I find, and they don't know what that means or what that could mean in the future. So that's probably tip 101. Ask your building inspector what that means. Don't just go, oh yeah, it's a cracked tile, no problem.
Yeah,
One tile, there's hundreds on there. One tile's fine.
Yeah, exactly right. There's a reason why the building inspector doesn't write down a cracked tile in the kitchen, but they write down a cracked tile on the roof.
Yeah.
But it's not something to be scared of, though, if you have to ask the questions, right? Because there's always going to be a cracked tile, but it could lead to big problems. And that comes down to not getting too hung up on all the little things, but that can be that could be, because of the way it was angled, and that's a huge problem. But you got to ask these questions, so...
Exactly right. Is it a cracked tile, or was there anything in the roof that makes it seem like it's a worse problem than what it is?
A good inspector should tell you, but not all of them will.
Yes. So ask your broker or your buyer's agent for a building inspector. Don't ask the real estate agent for their building inspector.
Definitely.
Sorry, Sky.
Fine, I don't refer them, don't worry.
One more, the gutters as well, just a quick one. If there's trees around and it's full of leaves, that can lead to a lot of issues as well. So the guttering system is a big one.
I've got one more.
Yeah, go.
Out for trees, honestly. Trees are the bane of my life. I know we need trees, like save the environment. I get it. But a lot of these trees have been planted too close to houses. I saw one of my buyers was looking at buying, and it's, I don't know, barely even a meter from the front window. And I'm like, you're going to have so many structural issues because that tree is just going to keep getting bigger and bigger and bigger. So you want to make sure that, not to say you don't buy the property, but be aware of the damage that trees can cause to properties in so many ways.
You heard it here first, guys. Sky says, fuck them trees. They're gone. There's a tree, it's off the list. Rolling on with, we're talking about money, so let's keep going. Number 4 on our list of top 5 mistakes first home buyers make: overestimating what you can comfortably afford. Now, I'll lead into this one because I probably see it the most when it comes down to how much people are able to borrow when they purchase. The number one question, apart from what's the lowest rate that you can get me, and that's another fucked question for another day, but is always, what's my maximum borrowing capacity? It's not ever, how much can I buy for? The question's always, what's the most that I can borrow? And everyone fixates on that question. And it can actually be the reason why someone will go with one broker over another, is that a broker's just given them a higher borrowing capacity figure, even though they can't afford it, full stop. A rolling example that I can give you guys is $1 million mortgage, right? Very common now. The average house price across the country is hitting the mill or is over the mill in most capitals. So $1 million mortgage is just a fact of life for a lot of people, right? Between the two of you, how much do you reckon the repayments are, minimum repayments? So the absolute minimum repayments, if you were going to pay off a home loan over 30 years, what do you reckon the repayments are on $1 million mortgage?
So $5,000 a month.
Okay. Sky, you're going $5,000 a month. What are you saying, Pete?
Probably, yeah, around that. 5.5.
Yeah.
All right. So we got 5, we got 5.5. How about we lock that in at just under $6,000 a month?
It's a lot of money. And a majority of that too is all interest. Another thing people probably assume is, yeah, it's $6,000, but I'm paying off the debt. You're not really. Of that, it's fuck all really, paying down the principal.
Yep. Let me put that in perspective for everyone who's listening, because it's already a huge number, right? $6,000 a month. Okay. To meet that repayment, you would need to be on a $95,000 a year salary, and your entire salary goes towards that mortgage repayment.
So that's why you need 2 salaries.
A, that's why you need 2 salaries. But B, that's not even accounting for utilities, rates, insurance, food, getting to work, the cost of even being alive. That's just making sure the bank doesn't kick you out of your own house. And the kicker is that's with no extra repayments. And so for that $1 million mortgage over the life of the loan, do you guys want to guess how much in total that person would be paying back over 30 years? So $1 million mortgage, minimum repayments over 30 years. How much do you think that they're paying back over the 30 years?
It's normally double, isn't it? With interest.
Sky, what do you
Probably
think?
be more,
Yeah, I
actually.
was going to say like 2 point something.
Yeah, 2.1 million. So you borrow $1 million, you pay the bank back 2.1, all because the bank said that you could borrow $1 million. Of course, the bank's going to say that you can borrow $1 million. They want their fucking $2.1 million. But when you look at it through the lens of what can you really afford, it's ridiculous that that's a whole $95,000 salary that just goes towards a home loan.
And in the first couple of years, you're not even paying anything off either. So you're basically working to pay off interest, which it's a reality we all have to face, but it's something people need to understand. And I think people miss as well. They just assume a lot of it is being paid off. But what is it, the first 15 years, you barely pay anything off, and then it gets a little bit better for you.
Yeah,
Pretty
I don't
much.
even check my balance. I don't want to know
Yeah.
because it's like it's the first decade, so I'm like, it's not going to be great.
No, definitely not. And that's where I'm always a proponent of making sure that you're either pumping the offset account or making a lot of extra repayments. When it's $1 million, for example, or what's my maximum borrowing capacity, I have a conversation with the clients around, okay, do you want to pay the loan off over 30 years or do you want to pay it off over 20 years or 15 years? And we'll reverse engineer that number. If it's $6,000 a month, it might be 7.5 that they actually need to put towards it to pay it down in any decent amount of time. And that kind of gives them the light bulb moment of, oh shit, maybe we actually shouldn't borrow as much as the bank will give us. And we're seeing it at the moment in the first home buyer space in particular, where it's very competitive. Everyone's maxing themselves out because they're all competing over a small segment of the market. Pete, you could probably touch on this, and Sky, you could as well, in terms of how quickly stock's going when you list it, when we're talking the under 800K price point, right?
It's fine. Anything under 800K across Australia at the moment is just flying off the listings. Yeah, they're not lasting very long, especially if they're quality. If they're like an A or B grade property, they're selling pretty quickly.
What do you mean A or B grade?
Well, I always categorize them like A, B, C, D. A D grade property would be like right next to a train line, but the station where it's ding, 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 you've got that kind of constantly going, or you're near like big electrical towers and stuff like that, or on a main road. And then you go into your C grade properties where it could be like a busy thoroughfare road or something like that, or maybe it's in main road, or it's in an area where there's higher social housing or just a lower demographic type pocket in there. Then you go into your Bs and your A grades where you might be close to a park, easy commute to the schools, might be renovated, good street, all that kind of stuff. So yeah, we like to categorize it in that instance, but the A and B properties are just, they're just selling.
Yeah, agreed.
Sky, are you seeing the same thing in terms of total amounts of inquiries, offers in that price point?
Yeah, I think the 600 is the hot pocket. Anything around that number, yeah, if you've got up to 800, you do have a bit more choice. But if you're around that 6 to 7, it's pretty limited what you can actually buy.
It's almost catch-22, right? Like the people, let's say they can afford up to $1 million, for example, and they're looking in the $600,000 range. They might end up buying a property that's really worth $580 and paying $650, and then they might actually be better off paying $750 for something that's worth $8.
Yeah, people are getting desperate. They got the capacity, and that often pushes up the more affordable pockets because they're just like, fuck it, we're just going to add an extra 20 grand to our offer. We're sick of missing out and just be done with it. Yeah.
Yeah, for sure. Really good way to lead us into number 5 on our top 5 mistakes first home buyers make. Going straight to the bank instead of using a mortgage broker. I could obviously ramble on about this forever, but I'll throw it over to the two of you because I'm interested to hear it from the buyer's agent's perspective and Sky as a property manager / sales agent. Where have you seen the value for your clients in the first home buyer space for them to use a broker instead of a bank?
It's options. We've had clients who sign up and come on board, and the first question is, where are you getting your finance from, or are you talking to a broker? And the ones that are talking directly with the bank are the ones that we find need the most help because they're only going to be given one option. And as we know, brokers have, how many lenders do you have on your panel?
70?
Yeah, you're access to 70 lenders, which probably means you've got double that in terms of options, like that you could actually recommend to clients. And it can be the difference between getting that extra 50, 60, 70 grand, which they can comfortably afford. They have to be able to comfortably afford that, and a good broker will take them through that. But that could be the difference between getting a C grade property or that A grade property where they really want to live there and they can see themselves long term being quite happy and can comfortably afford it. A good broker will give options compared to a bank who will just give what they can recommend on the day, which is normally not in the best interests of clients.
As the sales agent in this particular example, if I knew that a buyer was going through a bank versus a broker, I would probably be a little hesitant because I know that brokers can get creative and they're generally a lot more responsive because as the sales agent, we usually speak to the broker or the lender, whoever, to confirm they've got finance of whatever number they've said. We need to confirm those details when a contract is placed. Brokers generally call me back. Lenders wouldn't. They just don't care because they're getting a salary regardless of what they're actually doing.
Yeah, for sure. I think that's one of the biggest things is that we're invested in our client's success, right? Because if the client doesn't settle on their property or find their property, most of the time we don't get paid.
Yeah.
You know, when it comes down to paying the bills, right?
Yeah.
That's what it comes down
Motivated
to.
get them the finance. And that's why as the sales agent, if I've got two exact offers, one's through a broker and one's through a bank, I'm going to be telling my client to go through the broker one because they're going to be motivated to get the deal done.
Gets it all across the line and everyone's happy. You both make great points in terms of getting offers across the line, responsiveness, product availability. For me, when I'm talking to first home buyer clients in particular, it's about putting my arm around them through the process. It's a big emotional journey. And something that we pride ourselves on and what we do is putting our arm around them and guiding them through the process and showing them the right way to make sure that their loans are structured up for success moving forward. If their long-term plans are they want to invest in property one day, or they want to build a granny flat on the property that they're buying, or one of them's planning on going on maternity leave, or one of them has very fluctuating income, like a FIFO worker, for example. All of these things we learn about our clients, we take on board and we roll it into our lender recommendations for them. So it's not just a lender for today, it's a lender for tomorrow, a lender for next year. Or it's a plan of you might be with this lender for 12 months and then we move you to someone else that you're going to be with for the next 5 or 6 years. It's very bespoke, and the example that I always use is a mortgage broker is for your home loan what a personal trainer is for your body. If you want to go into the gym and get certain results, you waffle around aimlessly, you'll get there eventually. But if you're working directly with a PT who can just point you in the right direction, learn more about you, what makes you tick, what's important to you, and tailor a plan to you, you're going to get those results a lot quicker. And a mortgage broker will do the exact same thing for your home loan structures and lending strategies that a PT will do for you in the gym.
So we've had a few clients come to us who are first home buyers, but they have a bit of a longer term strategy around what they want to do with property, and that is to build a portfolio. And they've come directly from the lender and they've got their loan pre-approval and everything like that, but there's no kind of real strategy in place. So had they executed on the deal with that lender, I know that their future plans weren't going to happen, or it was going to be a lot harder to execute on. So I think it's a really good point around a broker being like a personal trainer, because property is long term and you can definitely do really well out of it, even with your first home too. It can really set yourself up and your family as well for future generations if you get it right. And that's what a broker can do for you, I think.
Yeah, wholeheartedly agree. And I'm not biased at all about using mortgage brokers. Okay, cool. So to lead us into the end of the episode, let's dive into our toxic take. where each of us will give you our most unfiltered, no bullshit opinion about what we've spoken about today. One thing we would tell every first home buyer, Pete, what would yours be?
Mine is stop playing victim and adjust your expectations or miss the market completely.
Awesome. Sky, yours?
First home buyers will screw their nose up because the colour of the wall's wrong, but they'll obsess over matte black tapware in a renovated property. Sis, you're not building a dream, you're building debt with better lighting.
My toxic take is you'll miss out on tons of properties if all you give a shit about is the lowest interest rate. And I've seen it happen day in and day out. And on that lovely note, I'm going to wrap us up for today. So Pete, Sky, thank you for your time as always. And for anyone listening, thank you for tuning in, and we will catch up with you next week.
Awesome.
Cool. What did we think?
Well, it went for an hour, but I think there was a bit of stuffing around.
There's chunks in the middle that she's going to have fun editing this one.